Good afternoon, ladies and gentlemen, and welcome at this Taxplanner support learning session. My name is Rizal van Jaarsveld. I'm the Business Development Manager for Taxbox Solutions. And today's session really is just a quick demonstration of what our software, our Taxplanner software can do. For those of you that is currently a client with us, obviously a nice little refresher. And if there's anything that you want to ask in terms of what the software can do, of course, there will be a Q&A at the end. And then for those of you that has never used our software before, we do have a support video that is available on YouTube, but it's 2 hours long. And we feel that sometimes people don't have the time to go through 2 hours. So today's session really is to highlight the basics of how do we add a taxpayer, how do we delete a taxpayer, and then we're going to do some calculations. We've got three taxpayer demonstrations that we want to show you that is going to incorporate some of the functions within the software. So this session is really just to demonstrate the functionality available in the system. Of course, we cannot show the SaaS integration because it's live data. And if you do need assistance with that, then of course we can help you personally. And today, Galanis Vonafakidis, the tax manager for FinSolve Solutions, who uses the software on a daily basis, she has been tasked to show you how to work the software. So I'm just quickly going to put off the video and switch seats with Galanis, and then she's going to open up the video just to introduce herself, and then the session is going to start. I hope you enjoy. Over to Galanis.
Hi there, everyone. My name is Galanis, and I am the tax manager at FinSolve. Today, we'll obviously be doing a support video. I have the privilege of working with Taxplanner every day. It really is such a help on a day-to-day basis as a tax practitioner, just being able to have a software that helps you, that it collaborates with SaaS so nicely, and you can just check everything on a day-to-day basis. So that's me at the moment, and I'm just going to switch my screen off so that I can start sharing with you, and then we can go through. So what we'll be doing is we'll just be going through the basics. So like Rizal said, just how to add a taxpayer, how to delete, how to use some functions. And then I will do 3 practical examples with you guys, which I think is quite nice, just as a good demonstration of what you can use Taxplanner for and what it looks like for each different taxpayer. No one's tax circumstances are the same. Everyone's got a unique tax circumstance. So, right, let me start sharing my screen with you. All right, so first things first, if you can see my screen, this is what your screen will look like once you enter Taxplanner. I am working in the 2025 tax year because that's the tax year that we're currently in. So I think that's just what we'll work with. And as you go through the different tax years, the tax rates will adjust accordingly. So on the top of the screen, you'll see 2025. That's the year. If you wanted to go and use it for a different year, you would just select there, and it would allow you to choose which tax year you would want to work in. So for your other clients who perhaps were naughty and didn't file their tax returns for prior years, you would then just go and select the prior year. All right. So that's 2025. There it's refreshed. Okay, so let's get into the basics. So once you enter Taxplanner, you've got your buttons on the left-hand side here. Taxpayer data, capture financials, tax paid. And here we've got add a taxpayer. So that is the first button we'll be going through today. Just as a test and a demonstration, if you want to see, this is how your create a taxpayer will work. All right, so back to it. You'll see if we add a taxpayer here, this is where we'll fill it in. Just to recap, so your ID number will affect your rebates. So if you were born and you are under 65, you get your primary rebate. Above 65, you get your secondary. And then obviously 75, you get your tertiary rebate. All right, so that's just on creating a new taxpayer. So we just want to say test 1 here, and then we save. And then we just say, okay, you need your ID in here. So there we go, Miss 980801. And then we go, and then we save it there. So you'll see there she sits, test number 1. And then from there, if you ever want to edit after that and you're not happy, maybe you were quickly adding a taxpayer in there and you didn't add all of the information that you wanted to add there, then what you'll do is you'll click taxpayer data in the right-hand corner. And then any time that you want to save, you say yes. And then from there, you can fill out. If you want to say maybe you found out that she's married in community of property this year and you want to change that, that will also affect the calculations. All right, so that's how to add a taxpayer. If you weren't happy that your taxpayer was done correctly, you want to delete them, this button will happen here. So there we go. Do you want to delete? Yes, there we go. So that's just on how to add and how to delete a taxpayer. So here, test 1. There we go. So that's our added taxpayer. Then from there, we said, okay, we're happy that we've added our taxpayer successfully. Now we want to start getting into the work involved. So we want to start capturing, maybe they had an IRP5, maybe they were a sole proprietor. We'll give 3 different examples today on what it will look like. From here, you also capture data, and this is what's going to populate. So very important, it will gray out everything until you've added in a source document. So you need to add a source document in there. And then from there, you'll start to work onwards. So a source document is if you maybe work for a company, you'd get an IRP5 and there's a certificate number you can put in there. If you decided that you were going to maybe trade as a sole proprietor, then you would just say trading as a sole proprietor. And then from there, it will start allowing you to use the calculator. So to add a source code, you would add on this button over here. So add, you'll see the categories are split nicely for you. So just like with your IRP5s, you can see obviously there's an income section of your IRP5, a deduction, and then your tax is your pay as you earn that you would then put in the tax column. So here, just it also gives you the source codes from the IRP5s. So that's nice if you have an IRP5 with you or pre-populating on e-filing. Then from there, you would just select there and then you would click. So 3601, your basic salary. If it's maybe a pension IRP5, then you would then just change it to pension, taxable, just anything like that. So you can just put that in there and then that's how you save. And then once you see in real time, once you save, you'll see on the side, this nice little summary is here for you. And as you update your calculations, all the information that you put into the income and deduction and tax columns will give you a nice summary on the right-hand side. So that's on how to add a source code. If maybe, for example, you were employed outside of the, if you were employed by a South African company, but you were actually outside of the country for a number of days and you qualify for the Section 10 exemption. So if you are outside of the country for 181 days and you get your 1.25 mil exemption, then this is how this would work. So maybe you earned a salary of 2 million, very nice salary. And you see, you've got a lot of taxes here, but you are outside of the country and you qualify for that Section 10 exemption. It would be considered a deduction here. So you would insert it here and you would look for the code, and your South African employer should be putting that Section 10 exemption code on your IRP5. And here you'll see it is here sitting as 4041. So that's your Section 10 exemption, which then will be your 1250. And you'll see there it adjusts your tax liability significantly. So if you look at the right-hand side, you'll see it went down from 700,000 to 191,000. So that is on how to use the Section 10 exemption. If you decided perhaps that you had a client last year that you don't have in your 2025 year and you want to import the information, you don't want to create that taxpayer from scratch. You see you've got 4 on the side here. But you saw that maybe there was someone whose taxes you did last year that's not on this database and you want to import. You'll see at the top bar here, you've got file, you've got edit, you've got transactions. So from the transactions column, I will say copy taxpayer data between years. And it will look like that. I don't know if you can see that from my screen, but it will say copy taxpayer data from, and it will allow you to select a year. So 2024, you'll see all of my taxpayers then show up there. And then if you were to import one, for example, then it would go through, and I said there, it's in my list to copy over, and there it's been copied over. So that is done. And then you will see once you refresh in 2025, that's how you refresh. There it sits, the import. So then you know it's been successfully imported from 2024 to 2025. And then all of the 2024 data that would have been here will then show up in 2025. And then you would just have to refresh it over there to get the latest rebates and latest tax adjustments for 2025. All right, so that's the refresh. There's two ways in which you can refresh on Taxplanner. So you can either refresh by going into the relevant tax year and just refreshing it over again. So there. But if you're in a taxpayer, here's a button here on the side, and that is just your instant refresh button. We will then go through 3 practical examples, and then from there, I will also then just show you what the relevant reports look like for every calculator that is used. So we'll go through all of the calculators on the right-hand side and just how to use them, what they do, what functions they serve, and then what the reports look like from those calculators. Okay. So I've given 3 practical examples today. The first practical example is pretty much, I think, the most basic one. I've given really temporary dummy names just for the purposes of the demonstration. So first things first, we will go through Mr. John Smith. So he is my first test subject, and he is a normal salaried employee. He has a few different nicks on his IRP5. He's got a subsistence allowance. He maybe got a retirement lump sum payout for the year. And he has a low interest loan, and he contributes to a medical aid and a retirement annuity. He also has a use of motor vehicle fringe benefit on his payslip. So from there, we capture our details. You'll see, first thing, there's the source code that I've done. So I've added his source code in here. That would have mirrored the RP5 that we have on e-filing. From there, we've got his 3601 code, which is his taxable income. So he earns 612,000 Rand per annum. So this is obviously an annual return. And then there we would add the amount in as his normal salary. From there, he's got a subsistence allowance. So with this, we don't add the amount here, although you probably could. It's not the best way to do it. It's just using the calculator is so much better. If you take a look at the right-hand calculator and you see that someone's got a subsistence allowance, you click on the calculator here. Because I've already pre-empted this calculation, it's already on here. So I will just edit my calculation to show you what it looks like. So this is what your subsistence allowance looks like as per the calculator. Your start date, you've got your start date here and your end date. And as you amend your days, your local days, the allowance and the meals included and the start and end dates change. So if you decided to put 3 days in, automatically your days would change, right? I see there's a question here that you cannot see. Hi, Lydia, do you have a blank screen? If you cannot see anything, you can refresh the webpage to connect. All right. Lydia, can you still see my screen? Can you still see? I'll just switch off and then switch on again, maybe just in case no one can still see. So if you can still see here. So just going back into it, here's our subsistence allowance here. I'm not sure if you can see. Great, thanks Lydia for confirming. So when I click onto the subsistence allowance here, I want to add something in, then you can just add subsistence as per IRP5. There we go. And then from there, as you adjust the local days, it will then change the start and the end date on the IRP5. And then if they've maybe given a 5,000 Rand allowance, then it will calculate on there the taxable and the non-taxable amount as per the SARS rates. All right, so that's the subsistence. Second button we have on the right-hand side is our use of motor vehicle. So this is obviously different to the travel deduction, and the use of motor vehicle is based on the cost of the vehicle. So once you have it here, you can add it in. You click on your button, and this is what will open. From there, you can say your description, which I just put under mine, John's Jeep, just anything, whatever your car looks like, whatever name it is. Also, based on your vehicle's cost, that's obviously how your fringe benefit is then calculated for the right of use. So whatever you put in here, that will then affect your fringe benefit value. So if you look here, you'll see the vehicle cost was 200,000, and then it's used the SARS rates to calculate the fringe benefit for you. And then based on the opening and closing kilometers, that's giving you your deductible value, which is just the same as a logbook. All right. So there we go. That is your use of motor vehicle. If you have a lump sum, for example, the retirement annuity lump sum. So for people who decide to go on retirement or are maybe retrenched and they get a severance package, then they get a lump sum withdrawal. And this is where this calculator is then used. Normally, the lump sum withdrawal shows as an IRP5 on e-filing, but you can use this button here. And from there, it will show your lump sum withdrawals. From there, you would put your amount in as per the IRP5, and every IRP5 or lump sum withdrawal has a tax directive. So you would then just click for the tax directive. And then from there, you put in your directive number and then the tax that was deducted off the withdrawal. All right, so that's the lump sum, which is pretty straightforward to use. And then we've got our low interest loan. So this is also just a quick function on the side. So it would look like this if you wanted to edit. So basically, if you're occupying a property that you're going to purchase from your employer, you get a fringe benefit. And then from there, you can just add the value of the property. And then from there, you put in your current interest rate, and it will calculate the relevant fringe benefit. Right. So that is straightforward for a salaried taxpayer. If you have a look here on a salaried IRP5, this is where you would add your pay as you earn. So any of your expenses or your taxes paid, these will show here. So your pay as you earn, if you had foreign tax credits, withholding tax credits, medical aid, that will show on here. So those are your taxes and rebates. And your deductions would be your logbook and your RAs. So just showing how to use an RA, it's the bottom button. Also very easy to use. You just click on it. And then from there, you say if you maybe contributed to Discovery or if you contributed to Sanlam, whatever, then you can obviously change that there. You put your policy number in as per your certificate and then your total contributions. It will automatically apply the rules for you. So the 27.5% or the 350,000 cap, it will automatically limit you to the taxable income on your IRP5. So that's also great. And then obviously next year it will roll forward. So that is your RA. And then we've gone through the right of use of motor vehicle and we've gone through the subsistence. So that's pretty much a salaried taxpayer, straightforward. And also just for a little nugget here, we've got capital gains. So if you aren't sure how to use the capital gains calculator, this is also a button on the side. If you have a look here, you can select and then basically depending on your capital gains, whether you sold shares, whether you sold maybe your primary residence within the tax year, this is all applicable on this capital gains calculator. So your date purchased and date sold, you need to insert in order for the calculator to actually work. Otherwise, it will read you out and you will have to put something in there. So because I've already put it in, it will show here. But if you were to create something, for example, it will not let you do anything without the date of purchase, all right, and the date sold. So you need to put that in. That's quite important. From here, your proceeds and your base cost. So if he sold shares and there's a base cost here, you would just see the middle column, the primary residence, is only for property. So you've got your property column or financial instrument. You can select. In his case, he sold shares, so it wasn't a property. So it will just be an unlisted financial instrument. And the gross gain was 35,000. All right. So you'll see it's automatically calculated it there. And if you want a quick report on how to view your capital gains calculation, you just click the print button over here and it will refresh and it will show you what it looks like. Right, folks, apologies about that. So we've just refreshed now and you should be able to see the calculators now. If you have a look here, you can now see the calculators. Yay, thank you, Lydia. I'm going to quickly run through it as quickly as possible just so we can get a quick catch up. Here would be your adding of your incomes. So if you have a subsistence allowance, you would use the top right button here and edit. And then from there, that's what your subsistence allowance would look like. Your local days, what you change here will affect your start and your end dates, and that will also affect your taxable amounts. All right, so that's a quick run through subsistence. Use of motor vehicle, you would then edit and amend here. Very straightforward. Obviously, a right of use is a little bit different to your normal travel deductions. So it's based on your cost of the vehicle and whether there's a maintenance plan involved. So that would then just affect the calculation and the fringe benefit deduction. So you would insert your logbook, opening and closing kilometers, and then the vehicle cost, and it will calculate the fringe benefit for you. All right. So that's that. Then we've got a lump sum. Very easy. You can choose withdrawal, retirement, death, or severance. Here you would put, it's probably going to be a RP5, like I mentioned. And then once you put your tax directive in there, you can edit your lump sum taxes. And then it will calculate the tax on the lump sum at the lump sum rates. All right. Capital gains. Here we go. It's this button over here. Edit. Like I said before, the dates are important. You can't edit without it. Proceeds and base cost. And then if it's a financial instrument, in this case, he sold shares. So he was an unlisted instrument. If you do have a property, you select the primary residence and it will give you the 2 million exclusion. And because obviously these are individuals, it will naturally do the 40,000 Rand rebate and the 40% inclusion rate for you. And then if you want to view, let's hope that it shows the screen. There we go. Great. So this is what the report will look like, and it will show you exactly what the calculation looks like. And this is nice to send to your taxpayers if they have questions. And from here, you'll see if he was married in community of property, which he was, it will automatically do a split for you, and it will give you the 40,000 annual exemption. Okay, so that's taxpayer 1. Taxpayer 2 that we're going to go through, let's do, her name is Lizelle Doe. She is a sole proprietor. She trades as a graphic designer by day. And she also lives a good life, and she sold her house in Camps Bay recently. So this is just a good example for her. So she has her business income here. So like I previously mentioned, you need to have a source document in order to use the source codes. So from there, we've just included her as a sole proprietor. And then from there, we've used the business income calculator. So this is nice for your sole proprietors because you can do an income statement for them on here. If you want to insert your assets and liabilities, you can. But here she had an income of 130 for the year. And her expenses, so her accounting fees, if you want to insert the accounting fees here, it will look like that, and you add or edit, and then you can amend the description. So it's kind of like a journal entry, and then all of your expenses are here, and it will calculate your net profit for you. And then that's the net profit that will show on your receipts and other accruals. And if she was a sole proprietor who used a motor vehicle for business purposes, and she obviously didn't have a travel allowance, then she would be getting her travel deduction based on her expenses. So you see here's our travel deduction button. You'll see because she doesn't have a travel allowance, it automatically grays out the left-hand side because that is based on an allowance. And then you'll see on the right-hand side, it says traveling expenses incurred in the production of income. So that is obviously based on your expenses. So she drives an Audi, a nice Audi for value of 500,000. Her running costs that we've inserted here, she had a starting kilometers of 3.5, closing of 8, and her distance traveled was 4.5, but 2,000 was business. So that would apportion her running costs of 3,600 by her business kilometers. And you'll see if you're not sure what they are using or what method they are using, you'll see here it's going on the current actual running costs because she's a sole proprietor. So that is her deduction. So there you go. All right, she was a quick and easy one. And then we've got our third taxpayer, who is Robert Gray. So there's Robert Gray. Robert Gray also works within the country, but he perhaps lives in England in most of his days, and he qualified for the Section 10 exemption. But he also does have an investment property in the country, and he earns interest and dividends. So another practical example, our source documents that we've then used would always be the salaried IRP5 first, and then his taxable income. Again, this would just be a mirror of his IRP5. Should his employer have taken the deduction into account, then it would show here. So there we go. There's his taxable income, and there is his Section 10 exemption, which then we have just taken into account. All right. So that's pretty straightforward, like I demonstrated in the beginning. Your pay as you earn that you would insert here. And as you can see, he does have a tax liability due. If you are using the calculator for provisional purposes, then you can insert your provisional taxes paid. Maybe he paid for the first year or for the first half of the year, and you're doing his second provisional. So you don't want to say to him that he owes 11 because maybe he's already paid 5. So you just go to your tax paid button at the top here. And from there, it will show, because your pay as you earn would have been as per your IRP5, you don't have to insert it here, but you'll select your provisional payments here. So you've got your first, your second, and your third. Let's just put this in as per SARS, and we'll say here the date submitted. Let's just go here. So maybe you even had a solar rebate for the 2024 year, or you want to include penalties or interest, you can insert that here. But we'll say the date was submitted, and it was submitted on the 31st of the 8th. And then from there, maybe he paid 5,000 Rand. Then from there, you'll say yes. And you'll see automatically it changes the tax liability due at the bottom. So because you've added your provisional taxes in, and it will also show here, you see your taxes paid is 178, which is your 173 pay as you earn, and your 5,000 provisional taxes. So then your tax liability due will show at the bottom. All right. And then just with all of these taxpayers, what I normally do when I'm sending a taxpayers report to a client, then what I would do is I give them a nice summary from the top. I select the reports over here. I love to send the taxpayers report here, and then this is just a nice overall summary. So it looks like that. It's 2 pages for your taxpayer. From there, you'll be able to see there was his salaried income, normal income, his other receipts, there was his deductions, and then from there, his provisional taxes also showed there, and his pay as you earn. And then on page 2, it would show the tax due as a nice little summary here. So that's one of the reports I like to share with my clients, and it gives them a general, is there a built-in report to send client as a prompt for supporting documents where the system remembers what was previously submitted? At the moment, no. It's not interactive in the sense that you can speak to clients through Taxplanner. It's more a calculator at the moment, but you can view your previous submissions through your prior years. And then from there, you would be able to then see what documents would be needed. And then from there, you would just be able to request it onwards. If you want, you can even send them their taxpayers report and say, as per last year, you had an RP5, you had rental income, you had medical aid, etc., etc. And then from there, you could just request from there. All right. And then your rental income button over here would look like this. Let me just show you what his looks like from there. From here, you would just add rental income is pretty straightforward because the expenses are very much limited to the rental income. So from there, your income was 100,000, interest on bond, rates, insurance. But if there were other things that you want to include, you can just add them under other expenses here, and then it will include there. If you are married in community of property, it will naturally put you in a 50% partnership. It will half. All right, so Taxplanner is sensitive, so it does remember if you put in a married in or out of community of property, it will adjust that for you. So with your clients, you need to remember to make sure that you put those details in, because that does affect your rebates and calculators on the application. So for your interest and dividends here, that is also quite straightforward. Your 4201 codes that you get on e-filing, it's your third-party data that's pre-populating on e-filing. We just put it through here on the interest and dividends. You can add it under local interest, local dividend, foreign interest, foreign dividend, and you would just insert, maybe it was from FNB, and then you would get your amount in there, and that's how it would look. Then once you save, it will show up here, and it will tax you accordingly. So that is the interest and dividends. We've been through rental income. We've been through the salaried RP5. And then if you were to add medical aid, this is what your medical aid looks like. So maybe he's part of Discovery. And because he's by himself, it's only him. So this button over here keeps your values the same for all months. So you can manually override this. If maybe you switched over from a medical aid throughout the year, or you stopped a medical aid, then that would then obviously change. Then you just amend it one by one, and then you can take it off, and then you say for this one, there was nothing. And it will calculate your medical aid tax rebate. And then from there, you can also add in your other medical expenses, which will calculate your Section 6B rebate for you as well. And then that is how your medical aid will look. So just random figures. There we go. And there it will show your medical aid contribution and the tax credit for the year. And that has pretty much taken away his tax liability. All right, so that's my 3 test subjects. I think it's pretty much covered what an individual can look like on Taxplanner. So the normal standard salary, a business income earner, and a rental income earner. And that's pretty much it from my side. Very straightforward. If you want to use other reports, we could just do a nice summary of what the reports look like. So if you have a look here, your reports, you can pick, this is quite the long way to do it. If you want to look at your reports through here and you want to look at names, then you can select on here. But once you enter the taxpayer, these are quick function prints on the side here. So if you quickly want to see what your medical aid looked like, it will automatically show it for you. So you can just click it and it will open up what the calculation was. So for each taxpayer, for example, your interest and dividends, it will show everything for you. And it's a nice summary that you can attach to your emails. All right. So your foreign capital gains, that would be part of your capital gains calculator. You could insert it here. All right, Diane, you could insert here. And there's your button here, and then it would be foreign. So you'll type here. So you can either pick local or foreign and it would amend for you. So same capital gains calculator. Everything is pretty much easy to find in the sense that when you use the buttons, your capital gains are linked together, your interest is linked together, your rental income is linked together. The buttons are very functional. So if you just click on them, it will take you straight to where your calculation previously was, or if you want to amend a calculation, it will ask you to change it. So that's just my quick tour today. Sorry for the first 15 minutes. I don't know why we had some technical difficulties in the beginning, but I hope that this was an insightful seminar and that you guys learned how to use Taxplanner a bit more efficiently and quickly. So if you have any other questions, please feel free to pop a message in the comments and then I can assist. Will this calculator balance to what e-filing is saying? Yes, it should. So because this would be a mirror of what your e-filing SARS calculator is, for example, your RP5, your rental income, your medical aid, if you have inputted everything that is on e-filing here, they should come to the same amount, unless SARS has perhaps issued additional tax and penalties. That would probably be the variation between the two. But otherwise, maybe your calculation is wrong. You would then just make sure that everything that you input in there agrees to e-filing and it will match. It will sum up nicely. Where do we put South African working abroad receiving the 1250 mil deduction for that foreign income and with the rules? So if it's on an IRP5, then the code would be as per the IRP5 here. And then your deduction. So if you have a look here, under your deduction column, these buttons here. So that is where your Section 10 exemption will be put in. So the Section 10 exemption, you don't need to have an RP5 to use the exemption code. You can manually insert the code. So if you know maybe someone's working on the cruise ships and they know that their income that they're using abroad is from the cruise ships, that income would then be your foreign taxable income. So that would look like this. Income taxable, you would have your foreign income here, foreign income taxable. Maybe they earned 500,000 abroad. That would be the code. And then you could still manually insert the Section 10 over here. Or you could use the 4041 code here. You can insert. And it will automatically amend the calculation for you. So the 4041 I know is for people who work abroad. And that would agree to e-filing. So once you do the wizard will also pre-populate the 4041 code on e-filing, and then you would use that code here as well. So it's just important to mirror the codes, and then once you know the codes, it will accommodate you. Any other questions? Maybe you didn't understand, there was maybe something that you would like me to go through again, then I'm happy to also go through it with you. Can this calculate exit tax for a person leaving South Africa? As far as I'm aware, exit tax is pretty much your capital gains on your South African property. So that would be using the capital gains calculator. Your exit tax is pretty much your tax. Yeah, your exit tax on all your property, that would be your capital gains calculator. So with your capital gains, you can include obviously more than one thing there. So if you want to use foreign and local, you can use the capital gains calculator for both. So if you, even for example, if you decide to sell your property within the year and you had shares that you sold in the year, the capital gains calculator, you can amend more than one thing here. You can add. So you would then just include it there. Awesome. All right, well, if there aren't any other questions, you are also welcome to pop me an email if you have any queries on Taxplanner as well. When the support video gets sent out, I'm sure that they can add my email address, which is Galanis@Finsolve. And then if you have any queries or struggle with anything, I'm happy to assist whenever I can. But thank you so much for attending today. I really appreciate the views and the support. I really hope that this was helpful to you and that you can refer back to this when using Taxplanner. All right. Thank you, everyone. All right. So that will bring us to the end of our session. Thank you very much, everyone, and have a great day. Take care. Bye.